Are you ready to navigate the future of finance? The investment landscape is evolving faster than ever, and what worked yesterday might not work in 2026 today. I'm giving you the 2026 Investing Map, a step-by-step guide to building a future-proof portfolio designed for sustained wealth. We'll cover everything from smart diversification to leveraging digital assets. Stay tuned until the end for how to adapt and innovate in the new economic cycle. The post-2025 market cycle isn't just a continuation, it's a redefinition. We're seeing persistent inflation, rapid technological adoption, and geopolitical shifts, creating both risks and unprecedented opportunities. The old rules of investing are being rewritten. Adaptation isn't optional, it's essential for wealth, preservation, and growth. The first pillar of a future-proof portfolio is smart diversification. This goes beyond just stocks and bonds. We need to diversify across asset classes, geographies, and technological paradigms. Think about exposure to private equity, real assets, and even alternative investments that offer low correlation to traditional markets. The key takeaway is, don't just spread your eggs. Spread them into different types of baskets that react uniquely to economic pressures. This strategic approach ensures that if one part of your portfolio is down, another part can potentially buffer the impact, creating a more resilient foundation for your wealth. It's about building an all-weather portfolio that can withstand the storms of the new economic reality. Our next frontier, digital assets. Now, this isn't about speculative trading. It's about strategic long-term allocation. We're talking about Bitcoin as a potential store of value, a digital gold, if you will, and Ethereum as an infrastructure play, the backbone of a new decentralized internet. The key is understanding their role in a diversified portfolio. For many, they offer a hedge against some of the vulnerabilities in the traditional financial system and provide direct exposure to a rapidly expanding digital economy. Allocate wisely, do your own research to understand the technology, and always manage your risk. A small calculated position can offer significant upside potential without overexposing your entire portfolio. It's a calculated bet on the future of money and the internet. Building on digital assets, let's explore decentralized finance, or DeFi. Imagine banking, lending, and borrowing without the traditional intermediaries like banks. For the savvy investor, this means exploring opportunities in DeFi protocols that can offer yield, or investing in the tokens of projects that are building the next generation of financial infrastructure. Now, a word of warning, this area is higher risk, higher reward. Due diligence is absolutely critical. We're looking for sustainable innovation and real-world utility, not just short-term hype. It's about separating the groundbreaking projects from the noise and understanding the true potential of a financial system that's open, transparent, and accessible to everyone. Now, don't forget the power of emerging markets. While developed nations face their own set of challenges, many emerging economies are experiencing robust growth fueled by young populations. Technological leapfrogging and expanding middle classes, emerging market ETFs offer diversified exposure to these dynamic regions, from Asian tech hubs to Latin American resource powerhouses. They provide essential geographical diversification and allow you to tap into growth engines outside the traditional Western markets. This is where innovation meets massive opportunity, and including it in your portfolio can provide a powerful boost for long-term growth. It's a strategic way to invest in the global economic shift that's already underway. The core of wealth building in the new economy isn't just about what you invest in, but how you think. The mindset of adaptation and continuous innovation is paramount. You have to stay informed, constantly challenge your own assumptions, and be willing to rebalance your portfolio as new data emerges and the landscape changes. The market is a living, breathing entity, and your strategy must be just as dynamic and responsive. This means regularly reviewing your allocations and making a real effort to understand the global macro trends that are shaping our world. This is the difference between a reactive investor and a proactive one. So, what are the practical steps you can take right now? First, assess your current portfolio's exposure to future-forward sectors like AI, biotech, and clean energy. Are you positioned for tomorrow's growth? Second, consider a small, strategic allocation to digital assets. Maybe 1 to 5% for most investors, depending on your risk tolerance. Third, Research emerging market ETFs that align with your financial goals. And fourth, the most important step, stay educated. Follow credible sources and commit to continuously learning. Remember, the goal is long-term wealth, not short-term gains. Consistency and patience are your best allies on this journey. Building wealth in the new economy requires foresight and strategy. This map is just the beginning of your journey. If you found this guide valuable, give us a like and share it with someone who needs to see it. Join the WGA1M Club and master the new economy before everyone else catches up. Hit that subscribe button and the notification bell to unlock your financial future. Thanks for watching.